Going on YouTube on that time with Diversified came with another video, and this is probably the number one reason why I buy high yield income funds. Before I begin, not financial advice, this is my personal opinion. You take your own risk in investing. The number one reason why, well, the secret to these funds, in my personal opinion, is ROI, return on investment. People do not talk about this on YouTube. They talk about the negative side of yield max, or it's trash and garbage, or even rec shares, or even anything do high yield 70, 60, or 50%. They think it's all trash. Now, in 2026, today, June 10th, it's been, high yield's been around for a good 3 years, and they've gone through a lot of changes as far as they'll change their perspectives, they'll change the way they do the funds. It's not a basic cover call. They do call spreads where they buy a call and they buy another call above the strike to capture more growth. And these yield max funds, these funds today, they're not capped. They're probably, they could go up to 89% as see it's snowy. And Mass Convested did a video about this. These funds today are not capped. Back in the day they were capped, but these funds are not capped. So if MSTR goes up, say 10%, Misty will probably go up at 9%. They are not capped. They're capturing all of that upward momentum. So people are going to say, but the number one reason why, more reason why I like yield max other funds, because they've changed the perspectives, they changed the way they run these funds, they changed the way they do call, they want more upside. But this is a small example. This is UOTI. It's like UOTY, but the rec shares version, right? Basket of stocks, they do cover call spreads, all that good stuff on different stocks. I seen a guy on TikTok do a good video about this because he buys these funds too, and he buys these funds too. And he did a quick math analysis on these funds. Now, we were saying that if you throw in $10,000 into UOTI, you get a certain amount of shares. So let's do the math right now, right? Let's do the math right here in front of you. The number one reason why I like these funds or high yield in general, because you get your money back very, very quickly. You get your money back very, very quickly. You get your money. If you hold on to it, you don't sell the asset, you get your money back fast. So I'm the dead hypothetical. If you were bought 800 shares, let's say you had $10,000. Now 800 shares is $9,800. So let's just say that's $10,000. That's a total $10,000, right? It gets you 800 shares, right? Let's just say today's price, $12.36. It gets you 8 shares, right? Just 800 shares, right? Let's say hypothetically you get that, right? All right, boom, you buy that, right? I'm not buying it, just showing an example of that, right? Now, you have 800 shares of UOTI now. You put in $10,000, it's 800 shares, they pay every week, right? And this is the example, this is simple math, right? It's at a 70% yield. So it pays around 22, 21, 20 cents. I'm gonna use 18 cents, right? I'm gonna use 18 cents as an example, right? That's the lower, it's about 18, maybe 17. Hell, I'll use 17 cents just to demonstrate, right? So when they pay a dividend on Friday, it declare on Wednesday, let's say they pay 17 cents. From here on out, they'll pay 17 cents. It can go higher, it can go lower, but I think 17 cents is a good number, right? So you do 800 shares, and let's just say 2 scenarios, right? Let's just say you want to cash out, get the dividend, you want to get your principal back in cash, right? So you times that by 0.17 cents, right? 800 shares, you get 130 bucks that week, right? So they'll pay 17 cents, sometimes 18, but let's just say 17 cents 4 times a week, right? So you times that by 4 every week. So you get $544 a week, right? So all you have to do is times that by 12, because you hold it for what's 1 year, 12 months in a year, payment every month, payment every week. You times that by 12. That is $6,500. So you have made over. So you put in 10,000, and year one, you made 6,528 in year one. So 1 year, you got back over half your investment already in 1 year. Now you're cashing out. You're not even reinvesting. I'm cashing out using the $500 a month to buy whatever, right? The next year, so you make that a year. So you times that by 24, because 2 years. In 24, in 2 years, I'm sorry, that's a year. So that's 1 year. So you times that by 2, so that's 2 years, you made $13,000. So let's just say they pay the same amount next year. It can be lower or less, but you made $13,000. Let's say you make $11,000 on the lower end. I always go to the lower end. You have made your money back in 2 years. Probably more than that, sooner than that, because I'm using the lower dividend, right? So you, in 2 years, 24 months, you have made your money back. Now here's the beauty of that. You made your money back, number one. That's positive. You've been cashing out the dividends all the time. They paid your principal back. So you own house, so you pretty much own house money. Like the asset is still paying you. Okay, so you own the asset, right? It's still paying you $500 a month. It paid you back all your money. So you have an asset, right, that's paid you back all your money. You still own it, and what you could do is harvest the income. You could just take the cash out and do what you want with it. You can sell it, so it pays you $10,000 or $13,000, and you can sell it probably less what you bought it for. Then people would say, well, it's worth less. It is worth less, but it's an income fund. If you gave me $10,000 and I paid you back $13,000, you made your money back. And you can still sell the asset, even if it's worth $5,000 or $6,000, you still make money off it. So anyway, you won't lose. Now, what if you didn't cash out? The first 2 years, what if you just took the dividend and reinvested? Now you have twice as many shares, because now it's 800 shares, you have 1,600 shares, right? You have 1,600 shares paying you, $300 a week? They'll pay you almost $1,000 a month. So that would be the smart way of doing it, and take that dividend and reinvest it and get more shares. Cause $10,000 is $10,000. Now the dividend could be higher, it could be lower. I'm doing a grain of salt, but this is what can happen if you invest in the high yield and you don't sell it. Don't be one of these people who go on high yield and treat it like a growth stock and sell it because it goes down. If you hold on to the asset 2 years, it'll pretty much pay you back all your money. And then your house money, you can sell it if you want to, but the smart people will just take the dividend and reinvest it. You reinvest and get more shares, so you're 2 times the X your income. So instead of getting $140 a week, you get $300 a week, $320 a week, and you probably make over $1,000 a month on one ETF, and it pays back your money. So you wouldn't care if it goes to zero, which it won't, but you wouldn't care if it's split, because it pays you back all your money, and you still own it, and you can still sell it and make money. This is one that made this ride. I buy high yield ETFs because the return on investment, anything at 70% yield, this dude's like 74. He did analogy at 74% in 1 year. You should make $7,400 in 1 year. You get back your money in about 15 months. So January, you bought in January. Once his next January, you got paid $7,000, and then you wait till March or April, it'll pay back all your money. Like, that's incredible. So this is the one of the main reasons why, because what investment on the planet today that I can invest that's 100% passive, that I can pull the money out when I want to, the dividends out, and use it to buy whatever I want, and I'll pay back all my principal. That 10K comes right back to my pocket. I own the assets still and still paying me. What does that? What does that? It pays the money back within 2 years. I don't think of anything. Maybe crypto. If you catch a really cheap crypto for pennies of a dollar and you put in $100 and 10x, yes, crypto can do that. But you got to find a coin that does that. This does it in the background for you. So this is the reason why I like high yield ETFs and dividends, because the return on investment, and people online do not tell you about this return on investment. They say it's bad. They say your max is trash, high yield is trash. They'll say, you know, Chippy's good now. It's good now. Everybody loving it. You notice that Chippy, no one's saying that about NAV erosion. No one's saying that. They're loving Chippy. They're loving it. But as soon as it starts going down, they're going to start bailing out. And they don't know if they held it for 2.5 years of Chippy, they can pay all your money back. They're going to pay back all your money. You're still on the asset and still paying you every single week. So this is my video. This is why I like high yield income. Nothing wrong with low yield income, but I feel like the high yield income is a better tool, especially in the Roth IRA, where you can let it sit there for 10 years and it paid you back 4 or 5 times over. It's beautiful in the Roth IRA because you don't even look at it. You don't even, you know, it's on automatic drip. And imagine, real quick, I told a story of the guy who a while ago, who like 4 or 5 years ago, who bought a $20,000 chain, who won $30,000 and out of taxes he got $20,000, and at $20,000 he bought a necklace, he bought a chain. Imagine that young man would have put $20,000. He could put $10 UOTI and $10,000 in ETF. But let's just say he put the whole $20,000 into UOTI. He could have made damn near what, $300, $320 a week. He could probably made $900 a month, and within 2 years it'll pay back all his money. He could have bought that chain and used UOTI to buy that chain, which is smart. That's how you do it. That's how you leverage your money. You buy something, you buy assets. You buy assets. Let the asset buy their chain. Now, I wouldn't buy a chain, my asset. I'll keep investing in that bad boy, I make more money. But if you want a chain, fine. Let the asset buy the chain for you. Don't use your own money. Use your chain money. Use your asset money. That $10,000, that $20K you won in the lottery will be paid back to you in 2 years. Thanks for watching.